Yeah, so in order to make the best of our time here, I think we should at least just get started with some introductions just to get that out of the way. So for anyone who did not attend last week, my name is Nick Roman. I'm on the retail demand team here. So really what that means is I'm on the phone with investors all day and really want to make sure that they're very comfortable using the Roofstock site. I go over what their goals are, whether they're a first-time investor or maybe they have some experience and they're looking to expand their portfolio. Really want to make sure that they're totally clear on what Roofstock does, help identify properties on the site, which markets to enter, go over their financing options, property management, really everything that Roofstock helps with on the buy side. Um, and then we also have a supply team, and I'll let Richard kind of go through what he does at Roofstock.
Yeah, thanks, Nick. So I work on the supply team here as a retail supply manager. Our goal within the organization is to work with sellers that fit into that kind of small market and mid market, demographic that would make up your individual property owners, property managers, turnkey operators in each market, agents. And so our goal is to work with them to get their homes up onto the site. So helping them position their properties accordingly, maneuvering them through the certification process that we'll dive into a little bit here today as well. So we don't get too far into the weeds yet, but ultimately working on the other side of the transaction for Nick to make sure that we're working with our vendors and partners to curate the inventory that we know that you guys are looking for, and helping the sellers be successful maneuvering through the platform with their disposition strategies.
Awesome. Thanks, Richard. So, yeah, 3 minutes on top of the hour here. So let's get started just with a quick background on Roofstock. So really, the whole idea of our platform is to help investors as well as sellers get into real estate. Like I said earlier, whether it's their first time investing or maybe they're an experienced investor. And Richard, you can see my screen okay, which I hope means that everyone else can see it. Okay. So really, we're an online marketplace, and really the end goal is to make investing in real estate as well as selling real estate extremely easy. Really, stock market simple is our slogan there. And to do that, we've really created a team that has a lot of experience in this space. We do have an industry-leading Roofstock Guarantee, which means that if the investor is unhappy with the property for any reason in the first 30 days, they can exercise their guarantee, which means that we would relist it on the site for free. And if it didn't sell within 90 days, we would buy it back from the investor. Several of our founding members, really all of them have experience in this space. So we've really built a team that's able to help investors both on a small scale, whether to the larger institutions that we work with, making real estate incredibly easy to buy and sell. On an investor side, we've made it very easy to utilize the website. You're able to set your criteria based on what your goals are. Once you narrow down to a few properties, you're able to analyze that property by looking through all of the diligence we provide, which is really key to our value add in helping an investor decide which property to buy. And then once you're ready to move forward, you are able to make an offer directly on the website. To do that, you type in your offer, you click review bid, and then the seller actually will respond directly back to you as the buyer. We then have a full service transaction team that's going to walk you through the entire closing process. I'll stop here and let Richard kind of touch on what needs to happen in order for a property to make it onto the Roofstock website in the first place.
Awesome. Yeah, thanks, Nick. So I think to boil it down, right, the certification process is made to emphasize our business models of goal to improve transparency within the real estate transaction. By definition, our goal here is to vet out certain elements of each property prior to publishing on the website. And I think a really easy way to understand how we've done this and how we define it is by we've really moved the diligence that is typically reserved for an escrow period to the front of the transaction. And so, as you can see here, what that means is taking a look at the documents relevant and the contracts relevant to the property. So that includes the tenant's lease, the tenant's ledger, any relevant Section 8 contract or homeowners association CC&Rs. That way we have a better understanding of the terms that you guys are inheriting when you purchase a tenant occupied home, the terms within that lease, That means, what does a late payment look like? When is rent due? What are the responsibility breakdowns for utilities or appliances within the property? And then looking at that ledger and that payment history to make sure that that correlates with the terms of that lease. Just getting a good idea and a fully vetted out understanding of the type of tenant you're inheriting, and laying that out for you guys to be able to understand. Next, and really, I think that the main pillar of the certification process is that inspection. So we'll send one of our vendors out to the property prior to publishing the home to get an inspection report complete. This is going to be a full interior and exterior inspection, looking at all the major systems, the AC, furnace, water heater, roof, all interior electrical, plumbing, to make sure that we have a good idea of what, if any, repairs are going to be needed for you. And so we'll lay that out within the inspection report, and that information quantified will also be laid out in the financials that we'll show you, and then we'll get into that today. Finally, we also do a title search to make sure there are no liens or encumbrances. Nothing, nothing hairy on the legal side that's going to pose a problem, through closing or post closing. So basically, all this diligence that we've done on the front end, in addition to marketing photos and the underwriting that we do, is all laid out in each individual listing. So we'll spend some time today kind of going through that, showing you how to find it, what to look for, so that you guys know where to go to review all this information. But this is a great overview of kind of what we look to do on the front end to build on the transparency and make everyone comfortable with the details of each individual property.
Awesome. Thanks, Richard. So what we did last week on this webinar, which was a similar setup, is we took a look at the 3 different types of investor profiles. So supplemental income, balanced investing, and long-term growth. Really, the idea here is to help an investor kind of learn about what their goals are and how they can match that up with the properties that we have on Roofstock. So really, starting with supplemental income, these will be lower priced homes that generally will have a higher cash flow attached to them. So you do have a lower purchase price, a larger tenant pool because there are more people who can afford that amount of rent, and potentially a higher cash on cash return. Some of the challenges that come along with these homes is they are generally in lower rated neighborhoods, higher operational costs, just meaning that things may break more often if it is an older home. Rent might not increase as substantially, and they are a bit more management intensive. Now, of course, as you move up in price, you are getting a home in a higher rated neighborhood. Your cash flow may dip a little bit, but really you're still receiving positive cash flow, and there is a good sized tenant pool as well. Because these are very popular properties on Roofstock, they are sometimes harder to find, and they become a bit more competitive, and potentially you are buying an older home as well at this point. Now, when we're looking at a longer term growth property, this is going to be for an investor who's a lot more concerned with where the property is, the neighborhood it's in, the school district. They're not necessarily as concerned with the immediate cash flow. They really want to see long-term growth. They want to see their rent appreciating, the property price appreciating, and then the exit strategy will be a lot more beneficial as well because the home may have appreciated at a faster rate. So last week on the call, Richard and I had set a filter on the site, which we'll do here shortly. We set a filter for a supplemental income property, and we looked at a quote unquote cash cow property. So what we're going to do on this call is we're going to set a balanced filter. So I'm going to pull up the Roofstock website here. And basically what we're going to do is try to find a property that would be a good fit for this type of profile.
And as Nick is going through this filtering as we go through this listing, questions are going to come up. So feel free to use that question section of the webinar to ask questions that might pertain to your particular investing perspective, your particular scenario, any questions you have about that particular home that we might be looking at. If we move over anything too quickly, feel free to jump in and ask a question so that we're going to be able to answer. We also have some team members in the chat function as well that are going to be answering some of those questions for you that we might not be able to get to immediately. So keep an eye on that and keep monitoring that so you guys can see as those answers come up. And if they start to spike to spur other questions that might come up, feel free to put it in there. And once we go through this property, we'll spend some time going down that list of questions one by one and answering all those for you guys.
Thanks, Richard. And yeah, we also ran into a timing issue last week where we weren't able to get to every single question, but we will make sure to address every single one, at least over text, if we're not able to get to them. and we're going to be going until about 1:15 Pacific time so that we can run over if need be. And Richard, you can see my screen here on the Roofstock website.
Yes, sir.
Okay, great. So right now we have just over 300 properties. Obviously, not everyone's going to have the time to look through every single one. So we built a filter tool, which we'll do here. For a balanced property, I would say it's really anywhere between about 100 to 200K. For this call, we're going to set it between 100 and 175. That's going to bring our total inventory down to 120. For a neighborhood rating, I do think we want to set at least a 3-star neighborhood or better here. This is the Roofstock proprietary rating on a 1 through 5 scale, and I'll show everyone where you can see the factors that go into creating that score once we pull up a property. So we're going to do 3 stars plus. That brings it down all the way down to 63 properties. Location, we're going to leave that blank, but obviously if you're looking for a certain state, you can plug that in there. Now we're going to go into this more drop down. So this is where you can get very specific on everything else that has to do with the listing. Your cap rate is going to be your net operating income divided by the purchase price. So we're very conservative in the underwriting, which we'll take a look at shortly. Most investors want to start, if they want to be cash flow positive, at least a 5% or higher. So for a balanced property, let's do at least maybe a 6.5. We can get pretty aggressive here on the cap rate, see if anything comes back. We do want to make sure the property is occupied. School rating, of course, you can add that in if you wanted to. We're going to leave that blank for now. Let's do maybe a 3-bed, 2-bath. Generally, that's what a family is going to look for when either buying the property or renting it out. Let's do at least a 1990. So within the last 30 years it was built. And then let's make sure to exclude cash only deals, just because most of our investors do end up financing the property. All right, so let's see what comes back in the results here. Wow, so one property. That's pretty incredible. So
Awesome.
quick note before we click into this. Yeah, quick note before we click into this property. You'll notice that it says enter filter name right here. So what I'd suggest doing to everyone who's searching for an investment property is setting your criteria, naming the filter, and then saving it. That way you're going to get an email notification anytime we post a property that matches that criteria.
Yeah, and I think one more note to that. I think what's really powerful about that filter, right, is that you can build multiple filters. They can be very general. If you want to build a filter just for Atlanta or just for Georgia, you can build very granular filters. If you want to filter for only, as you saw Nick do, bed, bath, square footage, occupied versus vacant, that type of thing. And I think what's really helpful, especially for new investors as they're learning the platform, but also what are they truly looking for, and what really works for them, is to build these filters and see the inventory come to you, as opposed to coming and having to look through every home. And then identifying, as those homes come to you, what do you like or not like about them? And as you start to identify the things you do like or the things you don't like, you can go back and adjust your filtering to make sure that it becomes more curated and tailored to what you're looking for. And that way, once you finally dialed in that filter and it's showing you all homes that you truly are interested in and that truly fit your buy box, through that practice and that exercise, as well as learning how to find the diligence and review it, you're going to be able to move that much quicker, be that much more comfortable and confident in your decision making. And being a competitive marketplace, it puts you in an advantage, knowing that the homes that you're seeing are truly within your buy box, and you know exactly where to go to review everything prior to submitting an offer. So continue to work on that. It's an exercise that I think is ever ongoing as the markets change, and as risk tolerances change, but something to definitely leverage if you really want to use the marketplace effectively.
Awesome. And yeah, and Richard, you can attest to this. We are adding properties every day. So it's definitely important, if you are actively in the search mode, to stay up to date on new properties that are being added, because sometimes they do sell quite quickly. So definitely good to set some filters so that you're not missing out on anything that does match your criteria.
Yeah, absolutely.
Yeah, great. So basically, I just want to run through what I do whenever we list a property. So starting with the asking price, sellers set their own asking price. So what Richard's team does is, it's actually, Richard, correct me if I'm wrong, it's one of the first things that you guys do is run a valuation report on the home to take a look at comps in the area.
Yeah, exactly. So we'll take a look, just like an investor would. Sellers will take a look with the help from Roofstock at the home from a comparable analysis as well as from an income approach to make sure that that home, is within range of where a true appraised value would be, as well as it's going to be priced to a point where the yield will make sense for the given neighborhood score, and that type of thing. So ultimately, that valuation conversation is going to be held on the front end.
Okay, perfect. Yeah. So the first thing I do is I look at the asking price, and then I move the down payment bar up to 20%, which is common for an investor to do, is really put the least amount of capital up front as possible. What you'll notice that does is it will adjust all of your financials. So we're not going to run through each of these individually. That'll be more for a one-on-one type call, which you can all schedule with me after we get off the webinar here. But that will show you what to expect as on a return basis. What I then do is I run through these 4 tabs. So it's very important to look through each of these as you're analyzing a property. Those would be the summary, financials, analysis, and buy process tabs. We also have a similar listings, just in case you wanted to look at homes in a similar price point. So looking at the summary, this will give you a snapshot of the current lease, as well as the area that the home is in, as well as a few bullet points. If there's anything to note that Richard's team came up with when discussing with the seller before the property made it onto the site, we will put those in here. So you'll notice the tenant moved in a few months ago. They have a lease that runs through March of next year. It's a well-maintained property, and so on. This neighborhood rating really stands out to me. A 4.5 star at this point is very strong, considering its metrics based on all neighborhoods across the country. If you click right here, you're going to pull up the neighborhood ratings page. This is where you can see how our data science team comes up with this rating. So there are 5 factors that go into creating the score.
And these factors are being pulled from the census data. If you guys are curious about where that data comes from, it's being pulled from the most recent census information.
And then the school scores, those come from greatschools.org, so a third-party site, very reputable there. They look at the elementary, middle, and high school scores in close proximity to the property, and that's on a 1 through 10 scale. You can then take a quick look at where the property is. You'll notice this one is just outside of Jackson. Very easy commute into the city for anyone who has a job in the downtown area.
Yep.
The financials tab, this is very important to look through. We're not going to dig in too deep here just for timing purposes, but this is where you're going to get a snapshot of what to expect on a returns basis. If you scroll down right here and you click where it says cash flow, on the left-hand side is where you'll see Roofstock's underwriting. This is where we get very granular on what to expect. If you click edit assumptions, you are able to do some underwriting on your own. So we've already included things like a vacancy factor, repairs and maintenance, capital expenditures. We'd much rather be conservative in the underwriting up front and then the investor outperform in real life rather than the other way around.
Yeah, I think it's really important, right? This is something that Gregor Watson, one of our co-founders, really puts a lot of emphasis on, is the yield at which the home truly operates at once an investor is purchased. Our underwriting comes from decades and decades and billions of dollars worth of transactions done in the institutional space. If you look at the past experiences of our founding team and our executive team, and so that along with the data analysis and data science teams that we have put together this underwriting. So it's extremely important that we provide a set standard that we like to go to market with, but we understand that every investor's perspectives and scenarios are different, and so we do allow you to go in and make those adjustments to the assumptions as necessary. And so whether that is an operating expense associated with vacancy, maintenance, property management, or the debt service that you guys are going to be putting together, all of those financials are malleable. And so as you go through the process, you're able to tinker with those to fit your particular scenario. But it's good to understand kind of where Roofstock comes from when we put together our financials, because that's something that we take extremely seriously on how we project a home to perform in the future. And we want to make sure that those homes do stack up as they go into the future. We understand that you can buy a great investment, but if it's not managed appropriately and operates appropriately into the future, it's not as great of an acquisition as it came off as 6, 12, 18 months prior.
Absolutely. Couldn't agree more. Moving on to the analysis tab. This is very, very important to look through. Here you'll notice the valuation range. So what that tells you is after that list of comps that we run through that Richard had mentioned earlier, we do come back with a range. So for this property, we're seeing between 138 and 157.9. The seller has to list within that range. So obviously they chose to go on the high end here. But every single property on Roofstock is negotiable. So you are able to offer below asking price and see how the seller responds. The only time that an investor ever has to pay Roofstock is upon acceptance of an offer, which is called the marketplace fee. The marketplace fee on a property over 100K will be a 0.5 percentage point. So if you offered 150 on this and let's say the seller accepted, that would be a marketplace fee of $750, which just goes to your credit card. There's no ongoing fee or additional fees after that one-time fee.
And just to clarify for those of you who have maybe gone through a real estate transaction previously, that marketplace fee is going to be separate from an earnest money deposit. And I know that's getting a little bit further down the road here, but keeping in mind that there is an earnest money deposit of $1,500 once the PSA has been executed between buyer and seller. So that marketplace fee would act separately from the earnest money deposit paid in escrow.
Right. Diligence documents. So this is really the meat of what Roofstock provides on the front end. If you click into the folder, you'll notice it'll pull up all of the documents together. So really it's very important to look through each and every one of these. Starting with the valuation report, you can see comps nearby. Looks like this was a very comprehensive report because I see homes really close to the subject property, which is always a good sign. There's always going to be 2 inspection reports listed. The first will generally be the overview of the condition. You'll see that this home needs about $1,300 worth of work. If you scroll through, you're going to get very detailed notes from the inspector, as well as the issue that was pointed out during the inspection. As far as who would take care of these repairs, cost-wise, you're responsible as the owner, but your property manager, and we'll get to that shortly, will be able to either take care of the issues on their own if it's a smaller issue. If it's a larger repair, say a roof needs to be replaced or something like that, they will be able to go out and get you quotes in order to get you the best price on remedying that issue. Inspection. Yep, go ahead.
Oh, so I was going to say, this is our way of continuing to build on the transparency. Any repairs shown in the inspection report, Roofstock is not stating it's mandatory for you to get them done or that you have to pay what's listed on that inspection report. This is basically our way of going into the home and noting, hey, this is something that may be more of a short-term repair that you might want to keep an eye on. It ends up coming down to it's your prerogative once you've closed on the home, whether or not you want to make those repairs immediately or later in the future, if you want to bake it into the offer that you're putting in. By no means is it a mandatory list of repairs that need to be done by you or anyone, but it's something that we want to note so that you guys are all aware of what's happening.
Yeah, great point. Really, the idea is that you're aware of the condition before you make your offer so that there are no surprises on the back end. So you'll notice this one is actually an invoice. So what happens is when that inspection takes place, Richard's team does go back to the seller, basically let them know, hey, this is the condition of your property. Do you want to take care of any repairs? A lot of the time, they will say, sure, I'm going to take care of some of these. Maybe I have a contractor I work with who can take care of it, at a low cost to me. And then that invoice will be uploaded on the site. Yeah. So, and here's the full inspection. This is a 70-page long inspection. Came back from the inspector. What you'll want to do is scroll through the entire report, take a look at the bullet points here. What you'll notice here as well, and we actually received quite a few questions last week on this, is starting on about page 10, there are going to be additional photos of the property all the way until the end of the report. It starts with exterior photos, and then you're going to start seeing interior photos of the home as well. So really valuable when you want to see the scope of the work that was done, as well as just additional photos of the property.
Yeah, super important. I mean, it's as detailed as taking photos of all of the labels and stickers of all major systems. So you'll be able to see the label on a furnace or a water heater, or an AC unit. All of those are going to be available, so you get an idea of the age of some of these systems. And then again, you have hundreds of photos here to review as well.
Right. You've got another invoice. Looks like seller did some work here. Title report. This just shows you that we did search title up front and you will take clean title. The tenant ledger. What this does is it will show you that we verified that the tenant is current on rents. Looks like they're very much current on this. We did just verify that they paid June rents. And then finally, the purchase and sale agreement. So this is what would be sent to you as the investor if you had an accepted offer on DocuSign. So we do pre-upload this just in case you wanted to take a look before you do have an accepted offer. So obviously a very important section to look into is this analysis tab. Finally here, and then we'll start answering questions after this. Financing options, we are working on revamping our financing page. That should be coming in the next week or so. We do have lenders that we work with, and I can always make introductions to lenders that we have a very high level of trust in and confidence in. Or you can come with your own financing. It's really up to the buyer. Below that, what you'll find are the property management groups that we work with. So the way that this works is anytime we enter a new market, we fly a team out and interview really as many different groups as we can, usually around 10 or so. Based on the interview process, we're going to choose anywhere between 1 to 4. So you'll see that you have 3 separate groups to choose from here. Just how the buyer can choose their own financing, you can also choose your own property manager. You do not have to work with these companies. Most of our investors do though, because they know that we've vetted them up front.
Yeah, I think again, going back to the underwriting, we recognize that a home may be operating great at the point of sale, but ultimately it's going to take a long-term great management option and being in place in order for that home to continue to operate at that same level. And so the property management relationships that we hold is something that we take very seriously and that we continue to build on and improve on, because we recognize that is a conduit between Roofstock and you for the foreseeable future, and into the hold of that property. And we want to make sure that those groups have the resources, the tools, the softwares, the teams, and the capacity in place to expand not only with Roofstock, but with you guys as your portfolios grow. And so we make sure that these folks are vetted out as detailed as we possibly can. We have personal relationships with all of these groups. And you can obviously get in touch with us at any point in time if there is ever any issues that arise. We accept feedback, and we do recognize that it's an extremely important relationship that the 3 of us will all hold together.
Yeah, great point. And a very common question I get on the phone is, is Roofstock involved after I close on the property? So the short answer is yes. We're very much involved in helping you make sure that you're receiving your monthly income. Like Richard just mentioned, we do constantly check in with our property managers. So far, the feedback has been very strong. And then you would also always have myself or a member of my team who's going to continue to work with that investor if they are looking to build a portfolio of homes. Great. So Richard, we've hit 12:30. Did you want to open up to some questions here so that we can get through as many as possible?
Absolutely. It looks like some of our team has gone in and answered some of those. So we'll start from the top with the oldest questions and go through from top to bottom, and see if we can get to everyone as our team continues to answer in the background. So the first portion was, if we buy a portion, 10 to 20% of a home, can we exit at a later time? So that is a little bit more relevant to the Roofstock One model where there's fractional ownership. So what we've gone over here today has been pretty much exclusively for the retail platform where you're taking full title to the property and not taking ownership of a portion of it. Ultimately, through the Roofstock One model, we will likely do a webinar on that later on. But the quick answer would be yes, as you guys look to buy portions of a home in the future, if you do choose to divest of those, there would be a secondary marketplace for you to be able to get rid of those. But ultimately, that's not necessarily something that me and Nick work on exclusively. So we're likely not the best folks to answer that, frankly. And so if you are interested in the Roofstock One model, feel free to let us know by reaching out, and we're happy to get you in touch with the right team to answer all those questions. As Nick, you might have seen his cursor highlighted. It's in that property share section. And so if at any point that's of interest to you guys, feel free to click on that, and it'll open up an entirely different web page for you within the Roofstock platform, and you can inquire with that team as well.
Awesome, thanks. Yeah, and this does just take you right to their website where you can learn a bit more and schedule a call with that team.
Yep.
All right,
And I
so
guess
next here,
it's a
yeah, go ahead.
quick highlight that now that we're at that portion of the site. One of the things that we hadn't gone over was you'll see that there's a portfolio tab as well. So we won't dive in too deep, but if you are in a position where you're looking to purchase multiple homes at once, whether it's you're looking for a 2-home portfolio or maybe you find a larger portfolio that you're looking to buy a subset of, this is a portion of the site where you're able to purchase in bulk. And so in the event that that's something that you're interested in, of course, you can get in touch with Nick and he can help you either build your own portfolio or help you purchase a preset portfolio that might already be there. But this is a great tool to use as well if you're interested in buying larger packaging.
Absolutely. Yeah, more than happy to discuss portfolios with investors. It's really anywhere from 2 properties at once all the way up to 100 plus.
Yep.
Great.
Cool. Next question. Let's say you purchase a property for $100,000 with a down payment of $5,000. How is the remaining $95,000 remitted, and what is the timeline? How is financing handled? So, Nick, do you want to cover that one?
Yeah, sure. So really the short answer to this question is the buyer can finance the property however they see fit. Most of the lenders, at least that we work with, will generally require at least 20% down. I do know that some lenders will go lower. You'll definitely want to have a conversation with them because sometimes interest rates will get a little bit less attractive the less you put down. You can finance the property, you can buy it outright cash, or anything in the middle. Another form of financing that some people use is using their IRA account, which is definitely something that we can look into as well on more of a one-on-one basis. But to answer your question, that would be usually that would be a better question for the lender because really everyone's different.
Yeah.
But I don't think you could do just 5,000 down. We're not working with VA loans or FHA or anything like that, just because those are usually going to be for someone's primary residence.
Yeah. And again, if that question at all was relevant to the fractional ownership or the Roofstock One model where you're putting in $5,000 on a $100,000 sale price, again, that's not something relevant to what we've covered here today in the homes that we've showed you, whether it's this one in Brandon, Mississippi, or some of the other homes within the site. If you're interested in that Roofstock One platform and fractional ownership, you can go to the property shares page.
Yep, good point. I realized that might have been what that person was referring to. So thank you.
Yep. The next question was, does these cash flows come back to us or get reinvested into the property? So ultimately, those cash flows will be coming back to you. So the tenant would be paying that property manager that you hired that rent amount. The property manager would ultimately take out that management fee, as you've seen listed in the management section. And then ultimately, you would pay off your insurances and taxes and mortgage accordingly. But any of that net proceed that would come to you in monthly cash flow will be wired straight back to you. And so it wouldn't be reinvested in the property. This is your property that you hold 100% of title to. And so you can ultimately do with the capital and the cash flow as you see fit, pay the necessary bills, when you choose to. But ultimately that would come through the property manager and they would take their monthly management fee as well.
Yep, and to piggyback on that, what I see with a lot of our investors is, especially that I've been working with for quite some time, is they will set aside the funds that they have that come from the property. So essentially, they'll just create a separate account even for that passive income, and they're just going to save it up for the next down payment, which is a really powerful way of doing this, right? Then you're really able to compound your income and just buy more properties. That's when it really gets exciting, is when you're able to get your second, your third, and so on.
Yep, great point. Great. The next
I'm
question,
seeing.
Oh yeah, do you want to read the next one?
Sure, yeah. So I'm seeing, do you have any funds where the money would be invested across multiple properties? So we don't have a fund right now per se, but what I would suggest doing is taking a look at that portfolio section or the property shares where you're able to invest lower amount, but no fund right now. That would be more of a REIT model. What I have had some investors do is either buy a portfolio, maybe cherry pick properties off the retail site, but no fund currently on the site.
Yep. The next question was, does the site list any comparable sales in the area by square footage? So short answer is yes. If you go to the analysis tab and look at the comparable report, so Nick showed you within the range, you'll see here that if you scroll down, there should be the price per square foot in that far right hand column of the comparables. So you're able to see how that's broken out on a price per square foot basis for all the comps as well as the subject property.
And you can still see my screen, right? That I pulled up the valuation report for this home.
Yeah, we see it.
Okay, perfect.
Awesome. The next question was, let's assume the property is destroyed by a hurricane. What happens then? Is there some kind of insurance that can protect against such disasters? So, at the end of the day, it's the insurance that you choose to include in the property. Part of the summary tab that Nick had mentioned was that it will show the flood risk. And so what we'll do is look at the FEMA website, and if the home is within a flood zone, which is typically the case for homes that are in that kind of hurricane path, and in some others that are near a larger body of water or a running body of water, we will include in our insurance assumption the need for flood insurance. At the end of the day, you guys can choose whoever you'd like as an insurance provider, and their particular premiums or coverage might vary. And so again, going back to what I mentioned earlier, we have our set standards for what we will underwrite for insurance based off of the most competitive quote we can get from our vendors. You can choose to utilize them if you see fit. If you think you can get a better program that has the same amount of coverage or greater or lesser coverage, you certainly can. But any potential hurricane insurance that's included in the property is your responsibility to get the coverage for. You can hypothetically buy a home in a hurricane path without that insurance, potentially, depending if your lender is okay with it. Ultimately, that's the insurance that would cover you in any sort of damages through a hurricane or any other natural disaster. I don't know if you wanted to elaborate on that more, Nick.
Yeah, no, I think you covered it, right? It's really up to the investor what type of insurance they buy. Obviously, you could go out and get earthquake insurance, flood insurance, hurricane insurance. That'll, of course, affect your bottom line, but really up to you as the investor. We do provide a quote on just a standard home insurance. What happens is once you have an offer accepted, you would be introduced to a member of our transaction team. And one of the first things that they actually do is send you a few different insurance quotes to choose from on the property.
Great.
So I'm seeing the next question about inspections. Very common question. This person had asked, "Can I order my own inspection?" So really, the short answer is it's yes. Most of the homes on our site do already have inspections completed, so they will not necessarily come with an inspection contingency. Really, the idea here is to streamline the transaction and just remove that part of the process post-closing or post-accepted offer. If you absolutely needed to order your own inspection, you can request that as part of your offer. The worst that could happen is the seller says no. So that cost would be to you as the buyer. What Roofstock has done is really remove that pain point up front, because before even offering on the home, you're aware of the condition so that you don't run into any snags during the closing process.
Yeah, I think what's important to note, right, is at the end of the day, these are tenant occupied homes, right? There are people living in there. And so our goal through part of the transaction, not aside from the fact that these are likely thousands of miles away from the location of the buyer, but we want to mitigate that friction to the tenant while also providing a deep level of diligence. And so it becomes somewhat tedious and more friction to continue to have on-site visits to someone living in the home. And so the goal would be, for the sake of the current owner who has to maintain that relationship with the tenant until the home closes, as well as a buyer who doesn't want to inherit an alienated tenant who may have had multiple on-site visits. The idea here is to lessen the friction there by allowing that upfront inspection to suffice for what the current condition of the home is. We'll also note that in the event that an inspection report is over 4 months old, whether it's the home's been on the site for an extended period of time, or the initial inspection occurred, a seller went out and made repairs. Once the inspection report is 4 months old, we will automatically associate an inspection contingency with each property. So that's something to keep a lookout for as well. And it's something that you can filter for if you choose to, and that's something you're looking for. But as Nick mentioned, right, being the conduit between buyer and seller in the marketplace, you can certainly inquire as to any contingencies or requests that you have, and we're more than happy to pass them along to the seller for them to be able to make the decision on what they're willing to accept or not.
Awesome. Next question is, how does my lender work with you after approving my down payment? So earlier I'd mentioned a few minutes ago that you will be introduced to a transaction coordinator. Their job at Roofstock is to facilitate the closing process, and a big part of that is being in constant communication with your lender. So they're going to schedule the appraisal. They're going to send you that purchase and sale agreement on DocuSign, which also goes to the lender. So really, they're your point person between the lender and the seller as far as getting the property closed on time, which will be a 30-day closing on a financed offer. And then if it's a cash offer, we do aim for a 15-day close.
Awesome. The next question, it looks like a couple of those ones after that have been answered by the team. Can you explain the tenant purchase option? So this is something that you likely won't find frequently, if at all, on the site. It's hard. The tenant purchase options are not uniform. Basically, in summary, what a tenant purchase option is it's a lease where the tenant has almost right of first refusal, or a portion of their rental payments go towards a potential purchase of the home in the future. And so generally there's a strike price at which the tenant has already agreed to pay for the property, and there's a term at which they have the right of first refusal, or the authority to buy that home within a certain time frame. Because tenant purchase options are not all alike, they're not uniform. A lot of the terms are different. A lot of the ins and outs and the intricacies of those are different. Right now, you're not going to find any. I don't believe, maybe select few homes that may have that. Ultimately, that's something that would be listed within the diligence vault for you guys to be able to take a look at, so you understand the terms. But again, they are not a common thing that we list right now, because we recognize that they are not all made alike, and it can be somewhat difficult to interpret them. And so, to your question, that's what a tenant purchase option is, but you likely won't find many within our site.
Awesome. And I think next question is really good for you, Richard. It's about why a seller would list with us in the first place instead of just going on the traditional route of listing on the MLS.
Yeah, I mean, it's a great question. What differentiates Roofstock, aside from all other platforms? I think through a traditional MLS, or not even with a broker, but through a traditional MLS, right? I think part of the issue that you run into is that for one, you're listing amongst investors as well as owner occupants. And so on the MLS, the expectation typically from buyers is to be able to gain access to the property. And so that can be difficult to put a sign in the yard, to do open houses with a tenant in place, right? With Roofstock, all of that friction, like I mentioned earlier with the inspection, is mitigated because we're not having to do on-site visits to the property. Buyers are leveraging all the diligence through our site in order to make an informed decision. And so there's less disruption to the tenant, and that relationship is still held strongly, right? So qualitatively, it's a lot less friction through the sale of the home. You're not having to deal with inquiries from owner occupants looking to buy the home to live in when you have 8 months left on the lease that you need to honor. Quantitatively, from a commission standpoint, our fee to sellers is 3%. That allows a seller to potentially save a couple points by listing it on Roofstock versus a traditional channel, which may be 5 or 6. And additionally, if a seller is determining, hey, do I want to list it right now on Roofstock with a tenant in place, or do I want to wait for my lease to expire, my tenant to vacate, to put it on the MLS to a owner occupant? There's a lot of unknowns going through that channel, right? If I list it on Roofstock, not only am I paying 3%, but I'm getting to collect income through closing. I get to collect my rent through the close of escrow. I'm typically selling the home as is, right? So the inspection's there to be able to highlight the condition of the home. Typically, an owner occupant is going to expect kind of a spick and span property. The carpets have all been cleaned. Everything is brand new, and it's move-in ready for the most part, right? And so from that perspective, the cost to sell can start to exponentially grow when you look at higher commissions, missed rental income through closing, the staging costs and rehab costs associated with getting the home ready for an owner occupant. And so those things start to add up. And not to mention, you may have to wait 6, 8, 9, however many months you have left on the lease, just to start the process of vacating the home, getting it cleaned up, and then putting it on market and then closing. So that time between when the tenant vacates and when you're able to actually sell the home may be anywhere from 30, 60, 90, 120 days. And that's 1 to 4 months of paying mortgage, paying insurance, paying taxes, but not having any income, which is the purpose of purchasing the home. So if it's a good investment property and it's cash flowing and there's a tenant that's happy in there, why vacate to put it on the MLS when you have a marketplace like Roofstock, where there are investors looking to purchase properties as is, with the tenant in place, and inherit that cash flow from day one. So I think that's quantitative and qualitatively a long answer to the question, but that's typically why a seller would choose to utilize a marketplace like Roofstock versus a traditional channel.
Great, thanks, Richard. I'll take this next one. It's about the marketplace fee. Someone is asking if they will receive the marketplace fee back if the deal ends up not going through. So really, it's a case-by-case basis. If you ever exercise a contingency as a buyer, whether that's an appraisal contingency or an inspection contingency, or the deal falls through to no fault of your own, then the answer is yes. That fee would be fully refunded to you as the buyer, just right back to your card. However, if there is a situation where the buyer, let's say they are not able to obtain financing or they get cold feet, which doesn't happen a lot, but obviously sometimes it does, then the answer is no. Really, the idea of the marketplace fee is to make sure that the investor does have at least a little bit of skin in the game so that they will be incentivized to move forward. Um, I work with investors all the time on making sure they're able to successfully close, go over the inspection results with them, make sure they are able to renegotiate with the seller and move forward on closing. So it is a case by case basis. But really, we want to make sure that you're able to feel confident upfront before you make the offer and just be totally committed to closing on the property. But again, if it's ever anything outside of your control as a buyer, then yes, that fee would be returned to you.
Great. Thanks, Nick. The next question, all I can run with this one. Are some of these properties also listed on Zillow or Redfin? So currently no. We all of the inventory that you're going to find on Roofstock right now will be exclusive to Roofstock. Those sellers have signed those exclusive contracts to solely put it on the Roofstock marketplace. As we continue to grow and expand and offer different types of options, whether it's pre-construction, pre-rehab, new built homes, different product types, different areas, we'll likely grow to a point where there will be some open listings and homes through other channels, syndications from Zillow and Redfin to Roofstock or vice versa. But currently right now, the 300 homes that you're going to see on the site are going to be exclusively found on our platform and not anywhere else.
Great. Thanks for that. And then next question is, what are the exceptions? It may be expectations, but it's exceptions here when purchasing a duplex or triplex. So we are primarily focused on single family homes. I'll just put that out there. We do have from single family up to a fourplex though. There is a filter for that on the site, which I'll just show everyone right now. The only real concrete exception is that the lender will generally require 25% down, just something to keep in mind. Other than that, really no exceptions. You're able to make an offer on them just as if it was a single family home, and you are able to set a filter for that right here under property type. So let's say you wanted to look at the multifamilies on the site. Like we went over earlier in the call, it's always suggested to save a filter if you are looking for a multifamily. That way, anytime we do list one, you'll get a quick notification. You'll notice right now we have 18. So definitely a good option for someone who's been interested for quite some time. Generally, they will not appreciate as well. It's also a bit harder for an exit strategy because it's really always just going to remain an investment property, and there's nothing wrong with that. But you might not get as much of a value add as if you were selling a single family home where you're actually getting an end use buyer, right? A homeowner who actually wants to buy the house and move into.
Great point. The next question was, I'll let Nick, I think this is probably a better one for you. What does a typical buyer's financials look like?
Sure. So we listed out on the site what to expect as far as closing costs go. So right here, you'll notice that we do include, and let's move this back down to 20%. If you hover your mouse over this initial investment number, you'll notice that this will include your down payment at 20%, your closing costs, repair costs, and loan fees. So this is your all-in number, right? So if you have that amount of capital, what we're saying is that you'd be able to comfortably close on the property. And then what you're also able to do is something that we didn't do earlier. If you did want to make an offer on the property, let's say you offered 154 on this, all you do is type that in. You'll notice that everything will adjust accordingly. Now your down payment is slower as well as your closing costs and loan fees. So that's where you can toggle those expectations for what to expect to go into the deal with capital-wise.
Yeah. Yeah, I think, to kind of go on a quick tangent related to this, it's, I think it's important, right? This is why it's really important to get that pre-approval, to get in touch with lenders before you go to submit an offer. That way you have a better idea of, okay, I have this much cash liquid. I have a program in place with a lender who's willing to offer me X percent loan to value with this percentage closing costs. this kind of financing or interest rates. And so that way, as you go through this, you can adjust your toggles to fit your program and understand, okay, well, I have that $35,000 in initial investment. I have this pre-approval letter. Not only will it make your offer stronger in terms of the perception to the seller, but also you can go into the transaction comfortably knowing that, hey, I have the capital ready, and I'm approved for this type of asset and this type of purchase.
Definitely. And then the second part of the question was, what does a typical buyer's assets look like? So really, it's all across the board, right? We work with a lot of first-time buyers who might not even own their own primary house. Maybe they live in a higher price market, but they do have some capital set aside and they want to get into real estate. So there's really no uniform fit to what a buyer's financials look like. It's really up to you just to make sure that you have that capital set aside. And then the lender does typically look at the capital that you do have, credit score, of course. Typically, they'll ask for some sort of W-2 statements within the last 2 years, but there's no barrier really to what your assets do look like.
Awesome. The next question was, do you have properties that are seller financed? This is, I think, in a similar answer to the tenant purchase option. No seller financing program is uniform. Whereas if you were to go to a conventional lender, typically they have programs in place and they have tiered structures where if you put a certain amount down, you have a certain credit score, you're going to get a certain type of program. With seller financing, that can be pretty difficult, and it can also be difficult for a seller to define a program without knowing all the ins and outs of the offer, right? What is a time to close? What is a purchase price relative to the list price? And so because it's so subjective, it's not something that's actively marketed on the site. If a seller is willing to offer seller financing, you'll find it in the marketing bullet point section, and it'll basically say something along the lines of seller financing available. And so if you see that, you can certainly inquire to see what kind of program that would look like, in conjunction with the offer that you submit. If there's a home that doesn't have that bullet point, but you are interested in seller financing, feel free to reach out to Nick or anyone on the team that you might be working with, and we're happy to inquire with the seller. Depending on the seller's goals with selling the home, they may or may not be open to it. If they're looking to cash out of the property to take that capital to a different investment, or they need the money for whatever it is, putting their kids through college, medical bills, whatever that might be, they might not be in a position to be able to hold that note and offer financing. But again, just like anything else, if you have an inquiry, we're more than happy to pass it along. It's not something that you're going to see prominently featured within the section of the site for seller financing right now. But in the future, it might be something that we offer, and we're certainly willing to inquire for you.
Great. Thanks for that. I'll take this next question. If you buy the property outright cash, how do we pay? After the offer is accepted, are we automatically connected with the seller and or title company? So if you buy outright cash, once you make your offer, you'll just select cash so that the seller knows that it's a cash offer. If an offer is accepted, the purchase and sale agreement is sent to you on DocuSign within 48 hours. As far as how do you pay, it's really just a standard wire transfer. We do, of course, connect with the bank to make sure that it's a very detailed layout of where to send the funds, making sure that you only receive the instructions from the appropriate party. And to answer your question on title company, we do open a third-party title and escrow upon acceptance of an offer. So you do not have to worry about finding a title or escrow company. So we do handle the cash transactions, aiming for a 15-day close. Obviously, no lender involved, so it is a much quicker closing.
Great. The next question was, can we sell the property at any time? Yeah, I mean, absolutely. It's your asset and investment to do with what you choose. You're obviously not ever required to list it with Roofstock. If you choose at any point in time you want to sell it, you certainly can sell it immediately upon purchasing. You can sell it at any point in time in the future. Again, it's your asset to do with what you choose. At the end of the day, there are tax implications for selling it within the first year for short-term capital gains, versus after the first year for long-term capital gains. There might be recourse with a lender for selling it immediately thereafter. So those are questions that you're going to want to have with those folks, your property manager, your lender, insurance providers, that type of thing, and understanding what are the tax implications of doing something like that. But at the end of the day, you can absolutely sell it at any point in time once you close on it. Yeah.
Great. Next question here is, are the tenants required to have renter's insurance in place when renting out the property? Short answer is no, but as the owner, of course, you can make that a requirement if you so wished. What I would suggest doing is reaching out to the property management firms that we work with and asking them their take on renters insurance. Do they think it's necessary? What type of policies are in place in that state? So really the answer is no, but as the owner, of course, if you wanted to make that a requirement for the person living there, you can do that. It's really up to you as the owner of the property.
Yeah, I think it's important as you guys look, especially if you do start to have specific geographic desires, you want to go into a certain market or that starts to appeal to you more than maybe another market. It's really important to understand the intricacies and the unique features of those type of markets. There are some markets where tenants bring their appliances. A tenant will bring their refrigerator and the microwave. There are others where the landlord's expected to provide it. Some markets might have a little bit more of a strict policy on renters insurance. Others, it might not be a standard for the tenant to have the insurance. So again, like Nick mentioned, I think the best people to talk to about something like that would be the local manager that you intend on hiring, especially if you look to build a portfolio there. You can have that relationship. You can start to learn about it from the eyes of a manager who's managed thousands and thousands of homes, so that you guys are comfortable with what you're inheriting and can learn. You might learn something about a market that really intrigues you or something that turns you off to the market. So they're a great resource. And that's why we hold them so dearly as a relationship and as a partnership.
Great. And then I also think next question might be good for you as well, Richard, about short sales and foreclosures on the site.
Yeah, absolutely. The question was, if I'm in the process of purchasing a home that is an REO, short sale, or foreclosure, does Roofstock require a seasoning period? So right now, I guess kind of similar to the earlier question of can you sell a property anytime? There's no current seasoning period. Ultimately, all of the same diligence is going to be done for the inspection, the review of the title, review of the tenant documents. There are some investors that may look at a ledger and say, hey, there's no history on the tenant payments, and so I'm a little bit less inclined to go towards something like that. There are other investors that look at it and say it's a brand new tenant, or there's the future outlook of the home is bright, and so I'm happy to inherit a home that might not have the same kind of seasoning. So we're objective there. It's at the end of the day, it's your call. There's no set seasoning period. You can turn around and then list it on the site. Right now, as a kind of a quick highlight, we're not doing any sort of assignments or wholesaling. So you would have to have ownership and title to the property prior to listing it on the platform for sale.
Awesome. And then we are approaching 1 o'clock here. So if anyone does have to run, we had mentioned earlier in the call that this will be recorded and it'll be sent out to everyone, as well as both Richard and my contact info. If you ever wanted to schedule a one-on-one call, that's what I'm doing all day, is on the phone with investors, answering every single one of their questions and making sure that they have a good understanding of what we do. We will go for another 15 or so minutes here. We do have several more questions. We'll try to run through them as efficiently as possible. But if you do have to run, definitely thank you for attending. If you wanted to stay on, of course, you're welcome to, and we'll just keep going here with these questions.
Yep.
I'll take this next one. How much are Roofstock management fees? So it's really a third-party company's fees. Earlier in the call, we went through the vetting process. So we do choose usually one, two, or three companies in each market. What you would do is you would click right here where it says buy process. You scroll down. So looking at the their separate groups, you can expand on what their fees are. So right here, if you click see more, you're going to see their entire fee structure, as well as a quick background on that company as well. Usually you're going to find right around an 8% fee on a monthly basis, and then they will generally have additional fees as well. I'll just jump into this next one as well, since it has to do with the same thing. So if the house is already leased, do I have to give that 2% as leasing fee? So no, once the property is rented, if you're buying a property that already has a tenant in place on Roofstock, there's no new fee for a new property manager taking over. They would just start with their management fee. The leasing fee, that is only charged when the property goes vacant. That would be the property manager's charge for holding open houses, speaking with potential renters, getting the property up on their website, and so on. So that would be charged once they did get a new lease signed.
Yep. Great point. Next question was, normally we have to sign a lot of paperwork when we buy a house. What is the process of Roofstock on this regard if you want to buy a house out of state and don't want to go there in person at all? So it's a great question. As a remote investing platform, we work with investors who are, out of state, sometimes out of the country. We work with international buyers and sellers, as well as domestic buyers and sellers. And so ultimately, all of the upfront documents, when it comes to sellers, the listing agreement, when it comes to buyers and sellers, the disclosures and purchase and sale agreement are all going to be done through DocuSign. Any amendments or contingencies or extensions that need to be put in place are all going to be done through DocuSign. Naturally, the closing documents are going to need a wet signature that's notarized. And so what we would do is the title companies that we work with to close these transactions will ultimately be able to send a mobile notary out to you guys. So wherever you are, we'll be able to send it. If you're at work, if you're at home, you're out on vacation, we can get a mobile notary out to you the day of closing. If you are international, for any of those folks that may be, tuning in from out of the country, or if at any point you're transacting on a property from out of the country, you could ultimately provide power of attorney to someone within the states to sign those documents for you. Or if you can make it to the nearest embassy, we are able to get a notary out there as well, to get a wet signature on those documents. But ultimately, those are the only documents that will need a wet signature at closing. And you don't need to be in the city, the state, or the country where the home is. We can make it work for you.
Great. Next question was, do you consider the use of hard or private money as a cash sale or a finance sale? I mean, it really just depends on what you work out with the lender. What you'll do when you make an offer is you'll either select cash or financing. So if it's a hard money lender and you are buying the property just with outright cash, you'll just select cash. If there's any sort of financing involved, you will want to select financing because that will stipulate that there will be additional stipulations to the contract, meaning there will be an appraisal contingency if that lender still needs to do an official appraisal on the home. So the short answer is it's really up to you how you finance the property, and then we would work with you and whichever lender that ended up being to close the transaction in time.
Yeah. At the end of the day, sellers are when sellers are reviewing offers and comparing cash versus financed offers, they typically understand that cash offers are able to close quicker and there are less contingencies with them. So inherently, a cash offer, whether it's in the investment space or even in the retail owner occupant space, typically end up being a bit more attractive because of the less friction that it comes with. So if you are getting private money or hard money and that lender doesn't require an appraisal, and they're willing to close and provide the debt without any sort of on-site visit or appraisal for the property, that's something that you should note because it helps improve the competitiveness of that offer at the end of the day. Yeah, so
Awesome. And then next question here is there room to increase the rents while the tenant is in place, or do you have to wait for them to move out before changes can be made to the rent? So you would honor the current lease. Once you take ownership, you're not able to adjust the terms of the current lease because the tenant is in that lease. So they're not going to be able to, you're not going to be able to just increase rents. However, once that lease is up, whether they move out or not, you are able to have a discussion with your property manager if you wanted to increase the rent. That's absolutely your prerogative if that's something that you wanted to do. What you'll notice is that on every property, there is a current rent if the property is rented right now, and then there's an estimated market rent. So what you'll be able to do here is click estimated market. You'll notice this one's renting right at the market rent because it stays at $13.75. Sometimes you will see a property that does have some potential to increase the rents. Again, you would just have to wait for that current lease to be up for renewal.
yeah, and I think for anyone asking Roofstock, asking us, where does that market rent come from? This is a number that's quoted by those property managers that you see at the bottom. And so, in addition to the diligence that we went over earlier for certification, the document collection, inspection, title search, underwriting, photos, there's also the vetting of or the getting in touch with the property managers to make sure, one, they have coverage for the market. So we won't list a property manager on a listing until we're confident and they've confirmed with us that they have the capacity to manage it and the coverage to manage it. But we'll also be able to get a quote from them on what the market rent looks like. So in the event that you're looking at, hey, am I going to be able to increase it? If it's vacant, what am I going to be putting it out for lease for? How should I be underwriting this? You can get in touch with that property manager and say, hey, I noticed current rent's $13.75 and market rent's $1,500. What the lease ends at this point. What do you think? What do you think the timeline would be to get it out for lease and leased at 1,500, and so you can adjust your underwriting. But that's where that market rent is going to come from for anyone that's curious.
Great, thanks for that add on there. That's very helpful. Are there any contingencies allowed that would allow us to recoup the EMD aside from seller default? So really there are your main contingencies. So if you're financing, you'll have an appraisal contingency. If you do exercise that contingency, yes, it would be returned to you, as well as the inspection contingency. With Roofstock, there's no financing contingency, which Richard had mentioned earlier. It is very important to get a pre-approval letter prior to placing that first offer. I had also mentioned earlier as well that I'm more than happy to make an introduction to 1, 2, 3 different lenders that we work with so that you can go out and shop around rates to really get the best interest rate. You want to take this next one, Richard, or do you want me to go over this? This is about trusting the inspection reports that are on the site.
Absolutely. No, I'm happy to go over it. So the question was, why would investors trust the inspection report? Do you always use the same inspectors in a given market? So yeah, I mean, this is a question I think that a lot of people have, right? At the end of the day, buying remotely, it's really important to understand the condition of the home and have a trusted source for that. Part of this is, yeah, we do use national vendors that we work with. These are folks that are dialed into our certification process, so we're able to understand their capacities, their scheduling, and be able to get somebody out there as quick as we can. These are all, again, like I mentioned, national companies that have licensed inspectors, and so they are of a certain standard where they're not just sending any old buddy out there to inspect these properties. They are a tight group, so it's not a vast array of different inspectors. It's I think 2 or 3 different companies that we work with that have their licensed inspectors in house that they're going to send out there to the properties. And so part of what's important about that is that there's uniformity across these transactions. If you go into the diligence vaults, the document centers, you're going to be able to see that the reports are formatted the same. You can go to the same place to see the information. The way that it reads is the same, and ultimately the repairs that may be highlighted are going to be the same. And so as you're looking in different markets, whether you're looking at a home in Dallas or you're looking at a home in Tampa or a home in Milwaukee, you'll see that those are formatted the same. And so that helps with the review process. At the end of the day, I think part of how we're able to prove that we trust our inspections, which, again, part of the transparency and building trust within the organization is, like Nick mentioned, we have our 30-day money back guarantee. So in the event that you purchase a property and there's issues with it post-closing, there is that ability to have Roofstock buy that home back from you. And so that 30-day money back guarantee, I think, certainly emphasizes the trust that we have in our third-party vendors and the inspectors that we work with. But at the end of the day, right, I mean, it's a real estate transaction. It's really important that you as a buyer have, put some onus on yourself to review this information, to look through the inspection documents in detail, understand all the things that were reviewed, look through all the pictures, get an idea of, what kind of repairs might be needed, get an idea of how much those are going to cost, so that you're truly aware of what you're getting yourself into. And so I think I've covered it to as much as we can. Nick, I don't know if you want to elaborate on that, if there's anything I missed.
Yeah, no, I think that's great. I think we can go to the next question here, which is, it was mentioned we can look into Zillow houses and it can be considered as well. What's the process there and how is that different to a house listed on Roofstock? So yes, we do have what's called the Bring Your Own Property program. Basically what that means is if you're browsing the open market and you find a property that looks interesting on, say, a Zillow or Trulia or just on the open market, the MLS somewhere, you are able to submit that property on Roofstock. What we do is property. The difference is that it's not to receive the same certification process. So if you scroll all the way down here on the site and click Bring Your Own Property, our underwriting team will list the property based on the same functionality that we use to do the underwriting on other properties. We'll look at the expected rents, expected property taxes, insurance, everything there. It'll be posted on the site for sale. You as the buyer who brought it to Roofstock actually get an exclusivity period, meaning you're actually the only one who can view that property. I believe it's for 24 hours, so that you're not competing with other investors on the site. You're still getting the whole Roofstock transaction team helping you close on the property, as well as that Roofstock guarantee. So really, it's a good model for someone who's able to spend the time and look off of Roofstock. And then you will, of course, have your normal inspection contingency, appraisal contingency, all that good stuff as well.
Awesome. Yeah, great program. The next question was whether the houses under portfolio show up in the property section or are they separate set of homes altogether? So there is overlap. If a seller has gone in and gone through a full certification process, you will see those properties individually available for sale. And so you might be able to click through to find them within the portfolio area, the portfolio section, or maybe you'll find them by filtering through the retail portion of the site. But you'll see that there are some portfolios, typically the larger portfolios, where not every home within the portfolio is going to be certified, and which that means is that it hasn't been inspected or the title has been pulled. Typically, we will always collect the leases and the ledgers for them to confirm that the homes are actually occupied and the tenants are current. Um, these operate a little bit more as a standard transaction where they will come with the inspection contingencies, and that financing or that appraisal contingency. So the answer is sometimes. Some portfolios, the sellers don't fully certify, a Roofstock won't fully certify. For instance, as on Nick's screen, you see the 72 home portfolio in Detroit. So not all of those homes are certified. There might be some of them that are available on the retail site, but ultimately, a majority of them from the portfolio section will not be fully certified, so they won't be found on the individual side of the platform.
Got it. Next question here, we'll try to get maybe 2 or 3 more out of the way, and then we will have to wrap it up. But again, we're going to make sure to answer all these after the call, as well as you are able to schedule a one-on-one call with either Richard or myself. If the tenant wants to move out after their lease ends, will the property management team take care of finding a new tenant? Yes, that's really one of their main jobs, is to get a new tenant in place once the current tenant moves out. It's a really good model because they're only receiving their property management fee on rent that's collected. So they want to get someone in there as soon as possible. They also want to increase rent as well because it's typically a percentage of rent that they're collecting as their fee. If there's some room to increase rent, it's really a win-win scenario because you as the owner, of course, would make more money on a higher rent. The property manager would also make more money as well. So yes, that's one of their main jobs, is to place a new tenant for you. I can take this next one, Richard, if you don't want to, as far as should I focus on properties that are close to our current location physically? Any problems with long distance management of properties? Great question. So I do get investors on the phone who think that they really want to invest locally. There's nothing inherently wrong with that, but really Roofstock was built so that you are able to look outside of your own local area. Let's say you live in a higher price market where it's just a lot harder to get in purely on a purchase price standpoint. Then Roofstock allows you to look into a much more affordable area. You'll notice that we're primarily going to be in the Southeast and the Midwest, right? Where you can still find homes between 100, 200K, even less than that. Whereas if you were to live somewhere on the East Coast, somewhere on the West Coast, really anywhere it's going to be very expensive. Denver, you're able to find something that's going to make more sense for you. And then as far as long distance ownership and long distance management, that's why we've taken so much time vetting these property management firms and making sure that they're aware that for the most part, when they're working with a Roofstock investor, they're not going to live nearby. So it's really on them to manage the day-to-day operations of that home for the owner.
Great point. Awesome. The next question was, so is it possible that repairs won't be done by Roofstock with the property management if it exceeds a set amount? So ultimately, I mean, I don't fully understand the question, but I think I get a kind of have a good idea. So ultimately, it's until the home is sold, it's the seller's prerogative as to what repairs might be done. So once the inspection is done through the certification process, it's at the seller's prerogative to make any of those repairs, just as it's your prerogative to budget that into the price that you're willing to pay. Typically there are, from a property management, this is getting a little bit into the weeds. For some of the minor stuff, the property managers will make those repairs automatically. Other things are going to require your sign off to go in and make those repairs. Roofstock ultimately isn't maintaining these properties on behalf of the seller or the buyer. We act as the marketplace for you guys to be able to transact. So if the seller wants to make repairs to their property in order to sell it, they certainly can. If you want to budget for repairs within your purchase, you certainly can. If you want to make repairs on the property once you purchased it, you certainly can. To what extent the repairs are needed to be done or how expensive they are, comes down to the opinion and the quotes that you guys are going to get. But Roofstock ultimately isn't facilitating any sort of repairs, and the property managers typically won't without guidance or sign off from you as a new owner. So I hope that answered the question.
Yeah, I think it definitely did. Great. So we've passed the 1:15 mark here. Richard and I both have calls with investors and sellers throughout the rest of today. I do have availability on my calendar even later this afternoon. So I believe, Richard, you shared our calendar invite links at the beginning of the call. Is that right?
Yep, absolutely. So I threw it in the chat section, so it'll include your email as well as a link to your calendar, and my email as well as a link to my calendar. So if anyone wants to book some time immediately or wants to engage in some correspondence via email, we're happy to help out either way, and work with you guys however you guys.
Absolutely.
Yeah.
Well, thank you everyone for being on there. Just so that I'm saying it out loud, my email is really easy. It's just nick@roofstock.com. Again, Roofstock is really built to help both sellers and buyers transact on properties with more ease. So thank you everyone for attending. I believe we'll start doing these every week, maybe every 2 weeks. Hopefully everyone was able to get their questions answered.
Yeah.
Our team will continue to answer those in the question format though online. And again, if you have more, which I'm sure most of you do, both Richard and myself are of course happy to hop on a one-on-one call.
Yeah, likewise. Thanks, Nick. And thanks so much, everybody, for dialing in. Appreciate you guys taking the time out of your day to come and learn with us. And yeah, like Nick mentioned, my email is richard@roofstock. So pretty easy. Feel free to shoot me an email if there's any other questions or if anything I said you liked or didn't like, I'm happy to talk it through. But yeah, looking forward to working with some of you guys, if not all of you. And enjoy your weekends. And hopefully we'll be in touch soon.
Awesome. Thanks, Richard. And thanks everyone for being on here.
Awesome. Take care, guys.
All right. Bye.